Welcome back to the Ledger Lounge. We've got Katie here.
Hi.
And Lauren.
Hello.
Today we thought we'd have a look at the thing that we think maybe clients find the hardest to understand sometimes, and when you're in business, it's not always obvious, the information that accountants give to you. So we're looking at profit and loss and the cash flow statements. And then next time we'll be picking up on balance sheets. So those are the three major financial statements that we use. So we thought we'd have a look at them because I'm sure you've had clients that have looked at a line of numbers and don't really understand them.
Definitely. I think the terminology is sometimes it goes perhaps not over the head, but maybe it does. They might not know exactly what everything means when we say it.
I think when we were talking earlier, you mentioned something. I said, they're running a business and they're doing what they're best at. And we've studied for however long we've studied to know about, accounts and...
Yeah. I don't think anybody sets up a business and starts to think about profits and all the different terminology that comes along with a set.
They interpret their own profits differently to what they actually are as well.
Yeah,
like
they'll
they don't
think
look
about
at the wider picture of all their expenses.
Yeah,
they'll think about making money, obviously, but they won't necessarily think about net profit, operating profit, gross profit. And it's not really their job to understand it. That's why they have us. But it's useful to them to understand what it means when we're talking about it.
and it really does matter.
Yeah, it's a shame that I suppose it depends what your client wants. If they're having management accounts or whatever, you're talking to them continuously about the profit and loss. But if it's a once a year, you just submit in the annual accounts. You can go through the profit and loss with them, and they just sometimes they just want to know what they've got to pay in tax.
Yeah,
they don't
and they can see
at it.
A set of financial statements.
So to them, it's just a load of numbers on paper, isn't it?
Yeah, it can help with avoiding cash flow surprises as well. So if you've got an understanding of what's going on that piece of paper, if you understand that and you understand you can make better decisions, you're going to get better confidence in your business. So I think what we'll do is we'll perhaps start at the top of what we see as a traditional profit loss account and maybe work our way down and try and demystify some of the terminology. Yeah.
So you've got your turnover at the start.
Which is made up of...
income you've received relating to your trade.
Sales.
Yeah.
Yep.
There's a couple of sections up there, isn't there? So you've got your turnover and then you can have other income from bank interest and other sources. But turnover would be the one that relates directly to your trade, sales that you make to your customers.
When we talk about turnover, we're talking about the sales that you're entitled to in the year.
Yeah.
So you might have billed somebody up front for some work, but that probably wouldn't be included in your turnover because you've got to say you've taken a deposit and you're going to deliver it at some point in the future. Then that wouldn't be included in the turnover figure we give you that we include in the account.
Then we have cost of sales, which basically says what it is on the tin, like it's the costs associated to you making that sale. So Steve, for example, his cost of sales would be wood and other bits and all the materials that he needs to.
I think that's very tailored to the business. So there's not a one size fits all for cost of sales.
No, if you're in a manufacturing business, quite often you've got materials, labour.
Yeah. So whether that's employees on director payroll or you've got subcontractors that you need to deliver those services.
I think with in cost of sales as well, the way I always think about it, it's the cost of the bits you've sold. It's not your purchase invoices necessarily, because if you've got something left in stock at the end of the year or the end of whatever the accounting period is, that'll be taken out of your cost of sales and carried forward because you're going to use that at some point in the future.
And then if you take the turnover less your cost of sales, that gives you gross profit, which can be confusing, I think, to people when they see two different sets of profit perhaps on, if they go into the softwares and look at the profit and loss or whatever it may be, they might not understand why they've got profit at the top and profit at the bottom as well.
So gross profit is before expenses of running the business. But I always think gross profit is a really good measure because you're looking at the difference between what you've sold and what it's cost you to sell that. And you can measure that with the gross profit percentage.
That really gives you the picture of whether your pricing's right as well for whatever.
Which a lot of people probably, I wouldn't say they struggle with the pricing, they're very good at what they do. But if they're not looking at that, i.e. if we're not bringing that up to them and the gross profit percentage is, I don't know, really low, compared to the previous year or previous months, they can make decisions there and then, so they're not making the same decision for 12 months and it's too late.
If your gross profit percentage is low and then you've got all your other expenses to come out as well, like rent or accountancy and whatever else may be further down, then you know that you're not in the best position. So that needs to be addressed.
So what are we looking for and what are people looking for when we're looking through a profit and loss generally?
So your gross profit is the bit that you can pay your overheads out of.
Yeah.
So you've gone out, you've done your job, and then there's this term overheads. So we've got, what have we got in overheads? We've got rent.
Rates, if applicable. Motor running costs, if applicable. We've got accountancy.
Advertising, marketing.
Yeah.
Light and heat,
Yeah.
utility. Snap.
So all of those things are coming out of the gross profit that you've made. So all of those costs take us to what we call operating profit.
Perhaps what some people forget when they're setting up a business is that they've got these overheads to cover, and they'll set up a business and they'll start pricing and they'll work out in the head gross profit in theory and say, well, I'm going to sell this and it's going to cost me this, so I'll make that, and then they forget about everything else, which I think is probably what I've seen a lot. In the past. They might remember rent, but the stuff that goes in there, software subscriptions, IT costs and everything else that they just won't build into their pricing structure.
Mm-hmm.
And that's, I think, where we perhaps see some businesses fall down.
Yeah, so it's really important to know what your overhead costs are, which is where budgeting comes in, isn't it?
Yeah.
Which is like if you're doing a budget or a forecast, it's trying to predict what your profit and loss is going to be, and then you can measure against that.
You should, as a business owner, or ask your accountant, if you're not confident doing it yourself, you should just sort of know really a rough cost of what your overheads are monthly and build that into your sales and the way that you're pricing up your jobs, whichever industry you're in.
Then there's this weird and wonderful figure of depreciation. Most of those things we've talked about, rent, electricity, are cash costs, aren't they? But depreciation isn't. It's like a non-cash item that we as accountants include in a profit and loss. But you don't get tax relief on it. And it's there to, so if you bought a car or, plant and machinery or computer equipment or a van, it's going to last you 5 years. Depreciation is there to spread the cost of that over 5 years. So that'll sit on your balance sheet and you'll be writing a little bit off.
For every different asset class type, there's a different depreciation schedule or method.
Yes.
So like if it was a car, I mean, it's all very, that's very tailored because plant and machinery will generally last a lot longer than perhaps a car would.
Yeah, so you might buy a machine, it might last you 20 years. You buy a computer, it might last you 3 years.
Plant and machinery holds its value very well.
Yeah.
So that would be depreciated over a longer period, which means that you're going to see a line in your profit and loss, which will, to your eyes, reduce your profits, but it won't reduce the tax that you've got to pay, which is,
unfortunately,
Yeah.
a nice little nuance of it.
And dividends as well. They're added back.
Yes. So dividends will be on your profit and loss if you're a limited company.
Yeah.
If you've made a profit, that is.
If you've made a profit, yeah. So we've got our sales, we've taken our cost of sales off there, get to our gross profit. We've got all these overheads, expenses, and we get to a figure that we call net profit, which is the bit you pay tax on, I guess.
Yeah. Well,
Slightly adjusted for depreciation we talked about. But
yeah, well, if there's a couple of what they call disallowable expenses like depreciation, dividends, then that's added on top of that. Some people call it a bottom line, and then you pay tax on that figure, which again is a nice line that's included in your profit and loss when your tax gets posted back in there if you're a limited company.
If you're a limited company, yeah. And that's the difference again between sole traders, partnerships, and limited companies.
Yeah.
Limited companies are governed in the way they produce their accounts, so they've got to include dividends, they've got to include tax, whereas sole traders don't.
I mean, they're not filed anywhere, are they, really?
No, but it's also them personally, so the tax isn't the business's expense, as corporation tax will be with a company.
Yeah.
It's their own personal cost of tax.
Common misunderstandings of profit and loss. Profit equals cash in the bank. Have you heard that?
I've
off
heard
any
that a
clients
lot.
before? Yeah.
Yes. So if you've got a profit, it doesn't necessarily mean that money's in the bank account.
You must have had that a lot in the past where because you're
Old.
see no Ancient. I'm joking. Because you're seeing clients a lot at that final stage and having to explain their financial statements to them. What does it mean when you're saying that profit is not necessarily cash in the bank to you and to them?
You've got sales at the top, but you might not have been paid for them. So if that money's outstanding at a year end, then that cash isn't going to be in your bank. So you can sell as much as you want, but unless you've got cash in the bank, it's either gone out on expenses or you've not been paid for it. So again, keeping an eye on your debtors figure. So your account receivable, making sure that you're getting paid. And I think we talked about ways of improving late payments in one of our earlier podcasts, all about you trying to use technology to improve cash flow and get that money into your bank account.
So what's the way that people could keep on top of that and perhaps try to avoid that happening to them?
Just keep your records up to date. Make sure your terms of trade are set out early, so that your customer understands when you're expecting to get paid, and making sure that you hold them to that.
I think comparing your month on month in the month that you're in is a good tip for people as well, because you can immediately identify before it's too late if things are getting out of hand.
Yeah.
Are your sales growing? Are your expenses getting out of hand? Are you spending too much money?
Yeah.
So if you keep an eye on your accounts, and this is where digital record keeping comes in really useful, because the software can produce a set of accounts a basic set of accounts for you.
I mean, if your accountant's only doing your stuff once a year, you can't really do that. If they're bookkeeping for you annually. And
I think we've said it before as well, that they end up doing it nearly 9 months after that annual accounts period ended. So even decisions,
all
you're 9
said and
months
done
into
then.
the second year.
It's too late.
Yeah.
So if you've got an accountant or a bookkeeper currently, I think that them doing it monthly is the way forward, really, which is the way that we work, isn't it?
Yeah.
We do all the bookkeeping monthly, we keep it up to date, and we can advise clients if we spot something that's getting a little bit unusual or something's jumped up, we can spot it right away, can't we? And equally, the clients have got their own logins to the software. So because we're doing it monthly, if they want to monitor their own profit as the months roll by, they can do that as well.
So you've made a profit, you've made your sales, your customers paid for them, you've paid your expenses. So you're left with money you've got money in the bank. But if you've got loans, they've still got to be paid. That money that's left after you collected all your money in isn't necessarily all yours, because you might have taken a bank loan out, you might have taken some finance for buy an asset. They've got to be paid. They don't get paid out of profit and loss on the profit and loss account, so they're not reflected in your net profit figure. They're reflected on your balance sheet because you've got a liability on there.
So although you may have made a profit, it's not necessarily yours to keep and spend if you've got liabilities on your balance sheet that need paying, which is sometimes a tough conversation to have with people as well, isn't it?
Yeah, and always keep an eye out for the tax man as well. He's going to want his bit of the profit.
Yeah.
So I was having a conversation with somebody this week who started in business in October, and they wanted to know how much their tax was being paid, but they weren't getting any feedback from their accountant on it. And so I was just talking to him about some of the simple reports he can set up to try and just estimate it.
Yeah.
I think having an eye on how much tax, so it doesn't bite on the backside in 6 months' time or whenever the tax is payable, is really important as well.
Definitely.
So that's all about assessing your business finances.
I think there's some people that will immediately write off, I don't understand it, I don't like numbers, I'm not going to, it's not my thing. But if you're the more open mindset to learning and understanding it, I think that's really important.
I do. And at the start of this, we talked about a business owner really just wants to focus on running on their business. It's an element of the business. Knowing your numbers is an element of the business you can't avoid. If you don't know your numbers, you can't develop your business.
And I think it must be quite painful to be running a business and not get to the end of the month and understand if you've made any money properly. If you're actually, if what you're doing is working financially for you. It might be working practically, you might be having a great time, but is it paying the wages? Is it, is it worthwhile?
Yeah.
I also think as well, like even if clients might think that, I don't really want to ask my accountant that, it sounds silly. Just ask, where am I at? What have I spent too much money on? Little questions like that. There's no stupid questions.
There are no daft questions.
But I think
right,
because they think, it's my accountant. they don't want to
Bother us.
Yeah, like ask certain questions.
That's a really...
I ask many silly questions all the time, still now at work.
I was thinking about this last week, so it's something unrelated, but I have always thought that the embarrassment of asking a question is worth so much less than the knowledge, the value of the knowledge that you will gain from asking the question.
Yeah.
You've just got to do it. Just,
Wow,
don't be...
That is prophetic, isn't it?
You think? But that's what I think, because
Yeah.
that's
No, I
what,
think you're right.
That's been
a
my
really-
mantra throughout
there's
my
never
whole
a silly
career.
question.
I'm
That
not
is it.
embarrassed to ask a question because every day is a learning day.
I'm more
for us,
embarrassed
it
to
is.
answer the question. The wrong answer.
I think the sooner in your business cycle you can get to understand your business, that can be done before your business starts by planning your business and sitting down and understanding where you want to get to in year 1, in year 3, in year 5. Have those thoughts. It doesn't have to be, I'm going to sell £10,000 in month 3 of my 4th year in trade. It doesn't have to be that detailed, but at least knowing the direction of travel. Then you're going to understand your business because you're going to understand how the numbers interact with each other, how your business generates those numbers. And we do see clients who never get it, never fully understand their business. And it could be because they don't want to, and maybe they don't need to. Maybe they
perhaps
feel
they
they don't need to. But you just wonder then, could your business be better?
You'll always get some people that are quite complacent with, say, if they're earning X amount of pounds a year and they know that and they've consistently seen that they're earning that. As long as they're getting that, then they're fine. They're not really interested in growing. They're just quite happy to be ticking over, if you like. I think
Just
there'll always
on-
be people like that, which is fine as well.
On the back of profit and loss, the systems that we use, like you said before, clients have their own login. It doesn't mean that they've got to come to our office for us to go through a profit and loss with them. They could be looking at it on their screen whilst we are on ours going through something. So don't wait till your end of your year to be like, oh, I'm not really sure why this is there or what happened in month 10 of the year.
Yeah, don't forget when you are asking your accountant, Katie, you said there's no stupid questions. We do this every day.
Yeah.
We have been to college, we've studied, we've got various exams behind us, and working in numbers or every day means you have the answers at your fingertips. So instead of you sitting down and thinking, I don't understand this, just ask your accountant. Just ask the question. And within 5 minutes, you could have the answer.
We're not expecting our clients to be able to understand everything that we do and say to them fully, because it takes, years and years and years to study to become an accountant. Like, how long did you study for, Matthew?
I can't remember.
Many, many years.
Many years, yes.
I mean, we
Yeah, it's
all
going to
do,
be 10
yeah.
years, isn't it? 10 years
So-
plus. And then many years of asking and answering questions.
Yeah, and
as well.
gaining the experience and starting out as an apprentice. A lot of people in accountancy do, and you gain years and years and years of experience under your belt, and then that enables us to be able to deliver the answers to your questions. And we're not expecting clients to be able to do that.
How long did it take you to study from start to finish?
This is not an interview about me.
No, I am actually curious now. Was it longer back then because it was all on paper?
Back then,
In the 90s?
it's on goat vellum.
Was it in the 90s?
It was on scroll.
Yeah, we had to go down to the river and
Typewriter.
slaughter a goat and get the blood and write with that. So, Katie, are there any practical tips for business owners that we should leave on?
Yep, review your numbers monthly is always a good start. Think of your profit and loss as the story of your business in that year, that month, that quarter.
Yeah, that's something that we've not talked about there. Like your profit and loss account is the story of the year or the period that's just gone. But your balance sheet's a snapshot in time. So your profit and loss, we'll talk about the balance sheet next time, but your profit and loss is what's happened in the last 12 months or 3 months or however long the period is. So yeah, thank you. Hopefully you drive a bit more enthusiasm for your numbers, get to know them, treat them as a friend.
Yeah.
And
And tune in next time for Balance Sheet.
see you next time.
Bye.
Bye.
The Ledger Lounge is brought to you by James Scott Accountants in Oldham, Greater Manchester. Please like, rate and subscribe wherever you listen to the show. To find out how James Scott can help you build a better business, visit jamesscott.com. This podcast is a QPod production. Visit kupod.co.uk for more information.